Good afternoon, everyone. Welcome to the Iowa City Public Library. This is our second Money Smart 2013 program. I would like to thank the Iowa State Extension. Oh, there goes our light. Iowa State Extension for doing all the coordination for all of the Money Smart 2013 programming. And I would like to thank today Bank of the West. They brought a wonderful buffet for lunch. And so if you aren't here and you're watching from home, go and make a wonderful sandwich and eat with us while we're here. We have three presenters today, all from Bank of the West. They are J.C. Snow, Justin Norton, and Maria Meller, and they are going to talk to us about Money Matters. And there'll be time for questions afterwards, and thanks for coming.
Hello, everyone. Welcome to Money Matters course. One of the first steps to financial security and planning is following through on a personal spending budget. Budgeting is about choices, choosing money, and how to choose to spend money. Today we will discuss financial matters, do individual activities, as well as have time for your questions. After completing this course, you will be able to list the steps for setting financial goals, track your daily goals and spending habits, prepare a personal spending plan to estimate monthly income and expenses, identify ways to decrease your spending as well as increase your income, and you will also be able to identify spending plan tools that will help you manage your bills. Each of you has a copy of our Money Matters Participant Guide. It contains information, tools, and activities that will help you learn this material today. If you're following at home, just grab yourself a piece of paper. Before we begin, we will see what you know about money. If everyone could turn to page 23 in your participant guide, there's a couple of questions that we just want to see how much you know about your money. At the end of the training, you can take it again to see if you've learned anything. So the questions are, number 1, I can list the steps for setting financial goals. Just rate yourself on a 1 to 4 scale. Second question, I can track daily spending habits. Third question, prepare a personal spending plan or budget to estimate monthly income and expenses. And 4, identify ways to decrease spending and increase income. 5, I can identify ways to increase my income. And 6, I can identify budgeting tools that will help me manage my money. Once you've rated those, just kind of take a quick look over them, see where you would like to learn a little bit more information as well. And if you have questions at the end, we can help you answer those as well. Setting your financial goals. Financial goals are specific to what you want to do with your money in a certain period of time. Before you create a spending plan, you should complete the following steps to setting financial goals. Your first step is identify and write down your financial goals. This can be paying off a credit card, paying down your home mortgage, buying a new car. For instance, I have a 1-year-old at home. I want to make sure that he goes to college, so that's one of my number 1 financial goals. Second, you're going to organize your financial goals. You're going to do this in time frames, so break it down into short-term goals under a year that you can achieve, medium-term goals, which are going to be 1 to 3 years, and finally long-term, 5 years or plus. Once you've organized them, you're going to want to educate yourself. This is where you can read financial magazines or books that will teach you with little effort how you can make your money increase and your net worth increase as well. And then you can identify small measurable steps that you can achieve these goals and put your action plan into work. Finally, you're going to evaluate your progress. You can review this progress as often as you'd like. We'd recommend at least every 6 months, just to make sure that you're on track for making progress on your goals. And if you're not, you can reevaluate them. Take that as necessary to make them work for you. Why do we create this savings plan? It's a good way to start taking control of your financial situation to develop that personal savings plan. A spending plan is a step-by-step plan for meeting expenses in a given period of time. Following a spending plan can help you reduce your anxiety for knowing and if you have enough money to pay your bills on time. And second, it gives you a sense of control over your money versus your money having control over you. And finally, it also helps you build assets that will improve your quality of life to your family. A spending plan is all about choices, choosing how to use your money and knowing what income and expenses that you do have. This will help you take control of your financial situation. There are 4 steps to preparing a spending plan. Keep track of your daily spending. Determine your monthly income and expenses. Find ways to decrease your spending. And finally, find ways to also increase your income. We will start with the first step, keeping track of your daily spending. Do you know where your money goes each month? It's common for people to spend all the money that they make and not having anything left over at the end of the month to show for it. How often do you guys take $20 out of the ATM and not know where it's been by the end of the day? We want you to be in control of your money, and you need to understand where your money goes. One way to do this is keep a personal spending diary to record everything that you spend. You can use this information to track your spending. Go for a month, see what you're spending your money on. And we're going to do activity 1 in your participation guide. It's page 7, so you can all turn to that. I'll read a little bit, and then you can go ahead and work on that. And as you will see in a minute, it's important that this information is an important part of your budget personal spending plan. It'll take you to determine what spending you can cut out or cut back in order to save money and pay your monthly bills on time. After a week of tracking your daily spending, take a look at your list. Consider what items you've purchased on a regular basis. These things add up. How many of you guys have eaten out this week more than 3 times? Is that somewhere you could cut a little bit of money? Anybody buy coffee today or a soda pop? Think if you brought that from home or made your coffee at home, how much that could save you. And cable packages. Do you guys have premium cable packages or data on your cell phone? Are those things you really need that you could eliminate to save yourself a little bit of money? No? I know, it's tough, isn't it? So go ahead and look at your page 7 in your participation guide. Write down what you've spent your money on today. If you didn't spend anything yet today, maybe look at yesterday. What'd you spend your money on? Go for a week. See how much you are spending on things that maybe you don't really need to spend your money on or that you can eliminate a different way. This is going to help you manage your money if you can eliminate those things. Now, we're going to take a look at your income and expenses. I'm going to invite Justin up here to finish that for us. Thank you.
Thanks, JC. All right, I'm going to go over today income and expenses, determining it, finding ways to basically create a budget. Do you guys all know where your money goes every month? Does anybody keep track of that on a daily basis? The next step in preparing a personal spending plan is to determine your monthly income and expenses. Income is the money you make from wages, self-employment. Some people get public assistance. There's also child support, alimony. Interest from any CDs, IRAs, that sort of thing, as well as Social Security for those people that are retired. Going the wrong way. There are 2 different types of income, gross income and net income. Gross income is going to be the type of income you get before any deductions, before taxes come out, Social Security. The net income is what you bring home, what you actually get on that paycheck each week or every 2 weeks. Social Security, there's different ways that Social Security comes out. Retirement benefits, disability benefits, family benefits, which are paid every month for those people that may have lost a loved one or disabled workers. Families sometimes get benefits from that. Survivor benefits for a widow, as well as Medicare benefits, which are paid as needed to help with hospital bills. They offer limited coverage for nursing facilities, other medical services for people that are 65 or older, and to younger people who are disabled. Your fixed expenses, there's 2 different types, fixed expenses and flexible expenses. Fixed obviously means that that does not change. Flexible expenses do change from month to month. You may have some degree of control over how much you pay, but for example, if you decide to lower your thermostat during the winter, that's going to help with some of your utility costs. You'll pay less than you may have done the month before. You can also, nowadays, there's utility companies that will set up budget billing, so you can turn those into fixed expenses as opposed to the flexible expenses. Anytime you can set up fixed expenses, it's going to make it easier for you to be able to budget, know where your money's going. I'm going to go over a list of monthly expenses you have control over, so something that you can change, such as utilities and that sort of thing. Savings is first and foremost. You guys can control how much you want to put away each month that you basically don't look at again. Utility bills, your gas, your electricity, making sure you turn off appliances and that sort of thing. And then your water, conserving water by installing like low flow shred heads and that sort of thing. Your telephone bills. Most people have cell phones now, and a lot of times those are becoming fixed expenses. But for those people that still have landlines, limiting the long distance calls, making sure you get caller ID so you're not answering the service calls that are going to end up costing you money. Food is another expense that you have control over. JC kind of mentioned it, going out to eat, controlling how often you go out to eat. Transportation, your cars, you can cut back on transportation, it's going to save you money in gas, as well as car maintenance. If you do your regular maintenance each month to your car, you're not going to have to worry about those big expenses later because something wasn't maintained. And then finally, personal expenses. That's what's going to be any of your extra add-ons, movies and entertainment, that sort of thing. Everybody has control over those. We're going to do an activity. If you turn to page 9 on your participant guide, there's an activity in there for monthly income and expenses. And what this is going to do is help you determine how much money you have coming in, so your income, how much is going out, your expenses, whether or not you have enough income to pay your bills and expenses each month, and a plan for income and expenses that do not occur on a monthly basis. So if you look at this, what you first want to do when you're setting up a spending plan is to figure out what your income is. And this is your net income, so what you're actually bringing home, what's in your paycheck. And you document that. So, for example, this couple has an income of $3,500. So one person's getting paid $2,100, the other one's getting $1,400. And again, these are what they're bringing home. And here lists some of their utility bills. Rent, they pay $1,000 in rent. Childcare is $400, so the daycare that they go to. They put $75 away for savings. Transportation, their gas, that sort of thing, $200. And again, their personal expenses. So as you can see, they have less expenses than they do income. Sometimes that's not the case for everyone. We're also going to go over a way for you to decrease your spending. If your expenses total more than your income after you've done this activity, this means you need to decrease your expenses. So what you can do, figure out what you can cut back on. Some tips to help you decrease spending or save more money is to develop and follow the spending plan that we just discussed. Carry small amounts of cash to limit your spending. I know most people, they go out, if they cash their check, the cash is in their wallet, they're going to spend that cash really fast. Happens to me all the time. I try to avoid carrying cash for that reason. Avoid shopping for fun unless you have strong self-control to only window shop. Use grocery shopping lists to prevent impulse buying. So don't go down every aisle and just pick out what looks good. Make a list so you know what you actually need before you go to the grocery store. And pay your bills on time to avoid late fees, extra finance charges. Anytime you're paying your bills late, you're giving money away that it's just lost money. It's doing no good for you. And also use direct deposit for your paychecks or federal benefits, Social Security. A lot of companies now are going to direct deposit payroll. Most companies have that option. You'll not have to pay to have your check cashed. If you have a checking account, the bank may reduce or eliminate the monthly fee if you have direct deposit. So some banks, if you don't have a checking account, you take your paycheck in, so they might charge you to cash it. Otherwise, if you do have the checking account, there might be discounts, benefits, waiving monthly service charges if you have the direct deposit set up. On page 10 of your participant guide, goes over some myths about direct deposit. I'm just going to go over a couple of them here. One myth is receiving paychecks or benefit systems in the form of a paper check gives you more control over your money because you can deposit it at your bank or credit union when it's convenient for you. The fact is, with direct deposit, your money is immediately accessible. It eliminates the risk of stolen checks and forgery and helps protect you from identity theft. Another myth about direct deposit is that people who do not have a bank account should not consider direct deposit. That's not the case. If you've not yet signed up for an account, you can call the U.S. Treasury's Go Direct toll-free helpline, and that number's on there for you. It'll help find an institution that offers low or no-cost accounts for people. Another myth, direct deposit does not really save time because the check still must be mailed to the bank. That's not the case. What direct deposit does is your payment is electronically transferred to your bank account. The payment process is completely paperless. Direct deposit is not safe as receiving a check because it's sent over the internet. Again, not true. Direct deposit works by transferring funds directly into your account through a highly secure electronic banking system. It's not the internet. It's the same system used by the world's leading financial institutions. And finally, direct deposit is expensive. As I mentioned earlier, direct deposit doesn't cost you anything, and sometimes it might save you money. Most banks and credit unions don't charge you to sign up for direct deposit. They may even waive your monthly checking account fee if you have direct deposit. Finally, finding ways to increase your income. If you'll turn to page 11 of the participant guide. Besides decreasing your spending and obvious ways to increase your income, like getting a second job, there are other options for increasing your income that you might not have considered. These would include earned income tax credit, child tax credit, credit for child and dependent care expenses, education credits, as well as tax credits for retirement savings contributions. These credits are described further in your participant guide, so take a look at it. The EITC, which is a federal income tax credit for people who work but do not earn high income. So you may not even realize that you qualify for this. Your accountant could probably help you with it, but if you qualify, EITC reduces the amount of tax you owe, and you may receive a refund. So something to consider when it comes down to tax time, looking into earned income tax credit. And finally, page 13 of your participant guide. If you ever need assistance in preparing and filing your income tax returns, you can use the services available through the IRS-coordinated Volunteer Income Tax Assistance Program or Tax Counseling for the Elderly. It's VITA or TCE. The VITA and TCE programs offer free income tax assistance for low-income, disabled, elderly, and non-English speaking taxpayers. Most sites offer free electronic filing or e-filing. To find the location of the VITA or TCE site in your area, call your local IRS office and speak with the Taxpayer Education Coordinator, or call the IRS at 1-800-829-1040. When you speak to someone from the government or another organization, remember to write down his or her name or identification number. All right, now that you've prepared a spending plan, Maria's going to come up and talk about tools that can help you keep track of your income and expenses. Thank you.
Thank you, Justin. I'm going to talk a little bit about keeping accurate records. So to successfully implement a spending plan, you must keep accurate records. There are some record-keeping tips to help you maintain accurate records. Keep records in a safe place in your home or in your safety deposit box. Organize your files so it's easy to find your earnings and spending information and to update important financial information. One of the nice things too that all financial institutions pretty much have implemented and credit card companies is having your statements online. This is a great tool because they keep your records for 7 years, so you don't have to keep the paper copies at home. You have an electronic access to your papers, statements that you can print out at any time in case you get audited or you need those financial records. So great way to save space at home for those of you that like to keep your records. I know my grandma still has records from 1981 when I was born, so great way to get those out of there and to keep your financial records. Keep your tax records for 3 years and mail checks for bill payments at least 1 week before they're due to avoid late fees. There are many spending tools that can help you keep spending and saving records and carry out your budget. They include the monthly payment schedule, the monthly payment calendar, the envelope system, the budget box system, and the computer system, and we'll talk about all 5 of those today. So the first one that we're going to talk about, and it's the activity, and it's on your participation guide 14, is the monthly payment schedule. The monthly payment schedule helps you plan in advance when you will pay your bills. It lets your records when you will receive them to pay those bills. You will need the income and expense worksheet that we completed earlier with Justin, so you can refer to that information. It contains the income and expense information that we need to transfer to the monthly payment schedule. So first, you need to transfer the income sources to the left column of the schedule. Also record the date and the income received. Oops. So there's the income that you're writing in this, on this line, and when you receive it. So in this example, one person gets paid $1,050 on the 5th and 20th of each month. The other gets paid $350 each week. Next, list the couple's expenses, including the due date, planned payment date, and the amount. The date period column is completed once a payment is made. Be sure to list the expense by the due date for the earliest to latest. The amounts and dates for the other expenses are savings, $75. And this is one thing that's important that my boss has instilled in me is you always pay yourself first. It is very important that you put money away for yourself first. Rent is $1,000 due on the 1st. Food, $400. Transportation, $200, then the personal expense of $150, the child care of $200 due on the 10th, the phone of $40 due on the 20th, child care for $200 on the 25th, and then the credit card payment on $140. So you can do this with your own bills at home, and you can use the participation guide for those of you that are here. So again, you save first so that you're always putting money away that you have so you don't spend it at the end of the month. So you put your savings away first. And one of the things that I personally do is with direct deposit being out there is most businesses allow you to direct deposit into several accounts. So I don't even take my savings into consideration. I have it direct deposited directly into my savings account. I never see it and I forget that I have it as income. So that way I'm always paying myself first. So that's one thing that I would recommend for you. Why is it important to assign due dates to food and transportation so early? Well, those expenses come out during the month. So putting that money away so that you have it at the beginning to last you through the full month. The next is a payment calendar. Another spending tool to help you carry out your personal spending plan is a monthly payment calendar. This tool serves the same purpose as the monthly payment schedule, but it's in a calendar format. So if you look, on your participation guide, I thought they had it up here. You can see that the calendar is there and that you just put in the due dates on when the payments are due and when you receive those incomes. Now, the other 3 methods that you can use are the envelope system. And Justin, who just spoke, he has used this system, and it's been very effective for him. This is where you use your bills if you have cash, and you put the name of the expense on an envelope each month and the date that it's due. and then you pay the bills as they come in. So you divide your income up equally into cash envelopes, and that way you only use what you have left for spending at the end of the month. And I recommend that you pay your bills right away, because then you're tempted to take that cash out to go to Olive Garden or to go out to a movie, because that cash is there. So make sure that you're paying those bills right away, so that cash doesn't look as tempting. Then there's the budget box system. And what this is you take a small box, divide it for months with dividers for each day of the month. And when you receive a bill, check the due date and place it behind the day that the bill is due. As you receive income, pay your bills right away, so you will not be able to spend that money and are not tempted to spend it on something else. This is something that I personally do, and I don't use a box system. I get paid twice a month on the 15th and the end of the month, either the 30th or the 31st. And right away, once I get paid, I know every single bill that I have in those 2 weeks, and I pay them out immediately. I do a budget system with all my electricity and my water, so I know how much I have to spend out. So then, that way, after all the bills are paid, and I do electronically, because I'm a banker, I'm very anal about having checks clear. My family, when I give them checks, it takes them 2 or 3 weeks to cash it. Don't like that. I send it out electronically, either using the bank website or the website for that institution, such as the water company, the credit card company, just so I can get those out on time, and I know how much money that I have left for other expenses. So I know that that month maybe I have an extra $15, $20 that I could go out to a movie or go to the Children's Museum with my son, something like that. I know how much I have, because I've already put my savings away. So I do recommend that system. The last system is the computer spreadsheet system. If you have access to a personal computer, you can create your own spreadsheets with columns for income, the date it is received, expenses, their due date, and the date you paid your bill. Include spaces under the income and expense column to total each. Use the help function of the spreadsheet software for instructions if you need it. There's also financial programs available. I know Kirkwood offers a couple on Excel on how to do budgeting that you can take if you're not familiar with that. Using a computer to manage your finances is relatively simple. Updating information is quick and easy, and it's important to enter transactions frequently to truly understand your financial position. My husband uses a system. We kind of keep bills separately, that we have our own bills. He loves going into the computer. He actually did it twice this week already, where he's updating what we paid on our house, so he knows what our value is and our net assets are worth. So you can do all those spreadsheets just by creating a budget and then making balance sheets as well. So he updates it daily, knowing how much we paid on our credit cards when bills come out, and where we're sitting on our loans, and are we almost paid down? What can we do to help pay off our debt? He gets excited about it. So it's very, very fun to see the progress being made and how much you're getting into a better financial position. Now that you're aware of various spending tools, select one that you're most comfortable with and just start using it. There are just a few more things you should know about budgeting, but whoops, we're not going to take a break. When there are more expenses than income is what we're going to talk about next. If your spending diary or monthly income and expenses worksheets show that you have more expenses than income, there are always ways to get out of trouble. But remember, everyone has different priorities. You will have to make the decision what is right for you. What payments do you think you should make first if you do not have enough money to pay all the bills? Generally speaking, it is important to pay the necessary household expenses first, so your rent or your mortgage, your utilities, and your food. Think about the health and the safety of your family when you're making these types of decisions. You always want to have a roof over your family's head, water and electricity, and food on the table. These are basic needs, therefore you need to pay your rent or mortgage before paying other bills, such as the telephone or credit card bills, to avoid foreclosure or being evicted. Many utility companies, the telephone, electricity, and gas companies have programs to lower your bill if you qualify. If you think you need assistance, contact your utility company to see what programs it offers. You may also be able to receive assistance from local, state, and federal agencies and organizations. I actually had a customer that came in last week, and we sat down together and looked at what programs were available because he was struggling, and before he came to me before he was late on his credit cards or things to see how he can cut expenses. So that's the most important thing that we can say today is before you get late on payments, come see your creditors, or Mary with the Extension Office has budgeting plans as well and can help you look at ways to cut spending before there are serious issues or consequences. If you can pay your monthly household expenses, but you're having trouble paying on the loans, again, talk to your creditors. They may be willing to reduce your payments or change the terms to accommodate your situation. Some creditors might offer extensions, accept smaller payments over a longer period of time, or accept partial payments. If you have a 15-year mortgage, but you lost your job and you're having trouble paying it, looking at expanding it over 30 years. I know Justin was working on that for somebody the other day, is they needed more money to pay their bills, and by extending the term of the loan, we're able to get that person the extra money they need to pay their expenses every month. Same thing if you have car payments or if you have credit card payments, talk to your creditors and see what they can do for you to extend the terms or lower your monthly payments. There's usually always options, and again, it is very important to come in before you're late on your payments to talk to your creditors. There's also getting credit counseling. If you're not disciplined enough to create a workable spending plan and stick to it, and you cannot work out a repayment plan with your creditors or cannot keep track of mounting bills, you can contact a reputable credit counseling organization. Many credit counseling organizations are nonprofits and work with you to solve your financial problems. And the one thing too to stress is make sure they're counselors and they're not debt consolidations. Debt consolidation companies charge high fees. They also might not pay all your debts. And they're the ones that are working with your creditors to try to negotiate rates, which is what you can do. You want to speak to an actual counselor, not a debt consolidation company. So reputable credit counseling organizations can advise you on managing your money and debts, help you develop a spending plan, and offer free educational material and workshop. Their counselors are certified and trained in areas of consumer credit, money and debt management, and budgeting. Counselors discuss your entire financial situation with you and help you develop a personalized plan to solve your money problems. An initial counseling session includes lasts usually an hour with an offer of follow-up sessions. And again, if you need help as well, the Iowa Extension Office provides this in Johnson County that they can help you as well. You can call there, and Mary said that she'd be more than happy to assist anybody that needs budgeting counseling as well. Kind of as a last resort is bankruptcy. Bankruptcy is a legal proceeding that adjusts the debts of individuals who cannot meet their credit obligations. Bankruptcy eliminates most debts. However, certain back taxes, child support, alimony, and student loans must still be paid. They may force you to pay higher credit rates and receive less favorable terms on loans in the future. So if you declare bankruptcy and you go to a car dealership and you want to get a new car or a newer car, you might pay rates of 20% because you're declaring bankruptcy to those that have good credit and are paying the 4 or 5 rate. It may make it difficult to get a mortgage, open a bank account, buy life insurance, and get a job because creditors and employers can run a credit check to determine your past financial history. And it's very serious. It stays on your credit report for 10 years. So it's on there for quite a long time. The law also requires you now to get credit counseling before you can file bankruptcy. So we're going to do activity 5, and we're going to talk about what you should do in this scenario. I'm going to read the scenario, and it's a couple that has more expenses than income. So the scenario is the Clarks hold off on paying their credit card bills until the end of the month because they know they do not have enough money to cover what they owe. They have 5 credit cards. 3 of them have an interest rate of 24%. The other 2 cards have an interest rate of 13%. 2 of the high interest rate cards and 1 of the lower interest rate cards are 15 days past due. Looking over the credit card bills, Mr. Clark is amazed to see that his wife spent $200 last month on shoes. She is amazed to see that he bought yet another power tool and spent $385 for it. No wonder they have no money, they say. When reviewing the bills, Mr. Clark confesses that he stops for coffee on his way to work every morning and eats out for lunch every day. Mrs. Clark admits that she gets a pedicure and manicure twice a month. By the time the Clarks pay their rent, utilities, car payment, and grocery bill, they do not have enough money to make their minimum payment on 3 of their 5 credit cards. So this is a very common scenario that we see at the bank. So what has caused these financial problems for the Clarks? Well, they overuse their credit cards. Just because you have the credit card balance doesn't mean that you have the means to repay it, so making sure that you're using the credit card smartly. Their personal expenses are too high. Does she need a manicure and pedicure every couple months? I know some people might say yes, but do we really need that? JC talked earlier about making your coffee from home. So Mr. Clark could take out that $3.50 Starbucks cup of coffee, and he can save that money each week. That adds up very, very quickly. And then eating out. My husband and I bought a new home this year, and we were looking at expenses of how we can cut. And we realized how much money we were saving if we didn't go out to eat. So we started staying at home, fixing our lunches every day, and it was amazing how much more money we were able to put away just cutting out lunches through work and bringing sandwiches to work and making our own lunch. So that is a great way to cut expenses. Other ways they can resolve their problem is immediately calling their credit card companies to explain their situation and maybe negotiate payments or negotiate the rates. They can continue to pay their rent, utilities, car payments, and grocery bills, making sure they're at least making those payments on time. And they also need to stop splurging. Again, Mr. Clark can make coffee at home and pack a lunch, and Mrs. Clark can do her own nails. What they need to do is stick to a spending plan, get credit counseling if they need assistance to help them create and implement the spending plan that we talked about earlier. Now, in summary, what we've talked about today is we've talked about the benefits of budgeting. We've talked about how to create a spending plan to track your daily spending and monthly income and expenses. We talked about how to use the monthly spending schedule and monthly spending calendar and other considerations to keep in mind when you're planning your budget. So that concludes Money Matters class. Does anybody have any questions for me?
Hi, I'll ask one quick question. What do you think of credit repair?
So ways to repair your credit?
An agency that claims that they can repair your credit. We were just talking about it earlier.
I'll let you-
Jason may want to address this. Thanks.
Credit repair companies, Maria kind of mentioned it, debt consolidation companies. 9 times out of 10, it's a scam. What those companies do is they're going to charge you every month a certain amount, and they're going to say that they are fixing your credit. They're going to take care of everything for you. They're going to pay off your bills. They don't. I mean, there's times when they might pay a couple things, but I've met customers that are paying this every month. It's coming out of their account. They don't even realize it, and those companies have done nothing, have never even looked at their credit. So a lot of times when I hear about credit repair companies, it's something to be very cautious about. Most of the time, you want to stick with credit counseling.
And what are some of the ways, what are some of the ways that credit can be repaired? What would a credit counselor help you with? Is it some of that negotiating with creditors and things like that?
Negotiating with your creditors, yes. One thing you want to be careful about is that they're not buying down your loan in a way. They're not paying it off, and that's another thing that credit repair will do. They will take the loan, pay it off, and then you pay us. Well, that dings your credit right there when they do that. So what the credit counselors are going to do is kind of like we discussed today. They're going to help you with a budget, figuring that out, so that you can make those payments on your own. And then, yes, sometimes they can cut down the rates, help you with your payments if you're going to your creditors.
And can I mention one resource?
Yeah.
I would encourage to pull up your credit report at annualcreditreport.com. It's the only free website. It's federally approved by Federal Trade Commission. And that's a great way to start. It's free. You'll be able to see a copy of all the information that's out there on you. So-
Once a year, yep, you can get that once a year. So if you pull it in June, if you go to that website, next June you can look at it again for free.
Hope I'm not cutting off any questions, so if anyone else have a question? No? I'd like to thank once again Bank of the West, JC, Justin, and Maria for this presentation. And I neglected to mention that the Federal Reserve Bank of Chicago is really the overarching sponsor of all of the Money Smart events that are taking place. There's another event tomorrow in Iowa City at the Children's Museum, so it's always a good idea to get children started in understanding their financial literacy, and so that's a great way to do it. And there'll be, I think someone is dressed like Ben Franklin, is that correct? And a number of activities at the Children's Museum at the Coral Ridge Mall. And we've already been talking about some kinds of things that we're planning on doing for next year, because Money Smart is an annual series of events. So thank you once again for coming. Thank you, Bank of the West, Iowa Extension Services, and have a great afternoon.